Hello students, welcome to today's lecture series on ACT 216, Principle of Business Administration 2, Study Section 6. The title of today's topic is Factors Influencing Business Entrepreneurs. Introduction. Business entrepreneur generally refers to business owners who engage in business with the sole aim of making profit. The numbers and sources of business entrepreneurs in an economy are sometimes used to gauge the gross domestic product of that economy. However, business entrepreneurs must deal with specific tactics and can sometimes struggle to find enough funding to succeed. However, there is no business without its challenges. Every business entrepreneur is faced with one problem or the other in the course of carrying out its business activities. These problems may range from rising of capitals to threats posed by competitors in the market. In this study section, you will learn the definition of business enterprise, the source of funds for business entrepreneurs, the factors influencing business entrepreneurs, and the major problems facing business entrepreneurs in Nigeria. Outline of study section 6. When you have studied this section, you should be able to 1. Define a business entrepreneur or business enterprise, explain the sources of funds for business entrepreneurs, discuss the factors influencing business entrepreneurs. Definition of business enterprise. A business enterprise is simply a business started to make a profit. This is distinguished from some other businesses which owners create to supply themselves and others with jobs. A business enterprise revolves around a single idea, a mission which the owner intends to use to create a viable company for the purpose of making a profit and succeeding in the business world. Business enterprises are begun by entrepreneurs who have the knowledge required to start a business and a key idea about a product or service and how it can be used to create a customer base and turn a profit. Entrepreneurs create a detailed business plan outlining what the business needs to start, what its marketing techniques will be, how to deal with competition, and what its first few years of growth will look like. With this plan, the entrepreneur tries to find funding to start the enterprise. The more enterprises that are being started in an economy, the more individuals are having ideas and finding enough capitals to begin their own businesses. This is generally considered a good economic sign. A low number of yearly enterprises may be a sign that entrepreneurs cannot find financing and that small businesses are being choked out by large corporations. Sources of finance for business entrepreneurs. Business entrepreneurs, both small and large, fail very easily, most because of inexperience and funding problems. To find these enterprises survive, many organizations offer special funding for specific types of businesses. Some organizations specialize in funding for enterprises, while government agencies help small businesses through loans and advice. There are a number of ways of raising finance for a business. The type of finance chosen depends on the nature of the business. Large organizations are able to use a wider variety of finance sources than are small ones. Savings are an obvious way of putting money into a business. A small business can also borrow from families and friends. In contrast, companies raise finance by issuing shares. Large companies often have thousands of different shareholders. Sources of finance for business entrepreneurs. Sources of finance for business entrepreneurs are as follows: loan, overdraft, grants, ventures capital, leasing, hire purchase, trade credits, friends and families, personal savings, issues of shares. Loans from a bank and other financial institutions. A loan is a sum of money lent for a given period of time. Repayment is made with interest. The lender of the money needs to know all the business opportunities and risks involved and we therefore want to see a detailed business plan. The lender may also want some form of security should the business run into financial difficulty and may therefore prefer to provide a secured loan. An overdraft facility with a bank. The borrower is given permission to take out more from his account than they have put in. The bank fixes a maximum limit for the overdraft. Interest is charged on the overdraft daily. Also, grant is another source of finance for business entrepreneur. Businesses may also qualify for grants. Government and private funds are sometimes made available to businesses that meet certain conditions. For instance, grants and loans may be available to firms setting up in rural areas or where there is higher employment or higher unemployment. We also have ventures capital as a source of finance for business entrepreneur. Larger business with cash to spare have been putting funds into small and medium-sized enterprise. Factors influencing business entrepreneurs. Although small and large businesses are vital to any economy, they are, however, constrained by the multifaceted problems that threaten their survival. These problems and the reasons for their failure have been widely identified, foremost among which we have limited access to deposit and credit facilities and other financial services provided by formal lending institutions. Some others are lack of planning, inimical government rules and regulations, poor marketing strategies, lack of technical know-how to high interest rate. However, for the purpose of this study section, the following are highlighted as the perceived problems of business enterprises in Nigeria. Factors influencing entrepreneur are as follows: inadequate capital, lack of good management, inadequate or lack of functional education, bringing owners' personal habits into the firm's affairs, poor financial management, employment and over-reliance on relatives, lack of training, inadequate or poor infrastructure, unstable and unfavorable government policies, marketing problems. Explaining these various factors one after the other, starting with inadequate capital. For most small business firms in Nigeria, the initial investment usually comes from the personal savings of their owners, which would have been derived from wages earned while working or proceeds of commercial activities. Institutional lenders often see lending to small business as being too risky because it lacks sufficient capital base and adequate collateral to guarantee loans. Credit facilities from banks, when granted, are often grossly inadequate. They also have poor financial management. This ranges from the visual lack of records to inaccurate keeping of the accounting and other records of the small business firm. Most small business firms are also guilty of buying too much on credit, extending credit too liberally to their customers, and carrying excess overhead. We also have lack of training. This includes lack of interest on the part of the business owners and unwillingness of arrange for their employees to go for training because the profit making is the overriding priority and not manpower development. More importantly, lack of technical training exacerbates the problem of upgrading product quality as well as diversifying production. We also have inadequate or poor infrastructure. The impact of inadequate infrastructure is felt on the cost of running business in any size in Nigeria. For small business firms, the cost of providing alternative source of water, electricity, etc. is so enormous as to frustrate small business owners. Many times, small business owners are compelled to reduce the scope of their business investment in capital assets for actual production and consequently make the operation of the business very uncompetitive and unprofitable. I've come to the end of today's lectures. Thanks for listening.